Hello, welcome everyone. Absolutely impeccable timing with SCB hosting a trading panel with the recent ETH God candle. So pretty excited to talk to everyone here. We got a lot of the biggest traders in the space. I'm Dan Burke. I'm CEO of Nirvana Labs, and just before we get started, let's thank SCB 10X for hosting this. This is the second year I've done this, and it remains to be one of the best conferences all year long. Um, so while we're doing the introductions, I thought like a really interesting way to kind of weave in the introductions that you guys are going to do of your firms is like 24 hours ago, we had like one of the craziest moves in ETH and it drug BTC and like the whole complex with it. I think an interesting way to get started while you're introducing your firm is like, what was that day like? Were you guys woken up in the middle of the night or did you sleep sound knowing that this is just another day in crypto? I mean, we got people that touch retail, we got people that run platforms, we got the biggest derivatives trader, we got the biggest spot trader. So I think it'd be interesting to introduce your firms and then maybe like what was going on inside your firms within the last kind of 24 hours as the whole space made a big move. Maybe Julian, you're closest to me. Maybe you can start.
Yeah, thanks for putting this together. My name is Julian. I'm the co-founder and CEO of Aevo, which is a one of the leading derivative dexes built on Ethereum. Um, yeah, I mean, yesterday was last 2 days was obviously crazy, and I think we had seen kind of a lull in like option volume for the last few weeks until sort of 2 days ago. So yeah, I think just like 2 days ago, ETH is our biggest market and it sort of like exploded. Like all the retail interest just came back in one day. So I think yeah, that's sort of what we saw on like the platform side.
Were you woken up in the middle of the night?
No, I wish I was unfortunately still asleep. So I only found out in the morning.
Yeah, funny. And Annabelle, how about you guys?
Hi guys, my name is Annabelle Huang. I'm a managing partner at Amber. So we're a crypto market maker and digital asset manager, started since late 2017. Um, Going back to your question, I was asleep because I know my team is in good hands with our North America trading desk covering overnight. So did wake up to the news. In terms of flow, um, actually, we saw a bit more, I think, on the ETH BTC side. I think people were trading the ratio a little bit. And option volume wise, we saw a little bit as well. But overall, I think people were shocked by the ETF news because I think we were pricing it pretty low before this 180. So I think people were more excited about what that means potentially for maybe the rest of the year or going forward this cycle. And maybe not just, it's not the craziest volume we've seen in one day.
Nice. Simon?
Hey, so I'm Simon Nursey, and I run derivatives trading at QCP. I'm stepping in to try and replace Darius, who's a favorite at many panels. Yeah, and QCP is a crypto trading firm. We started out in spot a long time ago. We still do on off ramping, but our kind of calling card is options market making. We're one of the top market makers in the OTC and the block trade space. And my Tuesday night, or sorry, Monday night was I did get woken up. I've got a excellent overnight desk, but it was all going a little bit wild, and we had a big position. I'm going to try to avoid looking too smug at this stage, but we'd actually called this very well and put out on our broadcast just the previous day that there was a big risk of a surprise to the top side on ETH. So we were positioned up for it nicely, and a lot of our customers were as well. So it was mostly a matter of trading the liquidity. Volumes in options have been pretty crazy since the event. Plenty going on, and we're just kind of navigating some pretty wild seas at the moment, trying to make sure we're properly set up for the big story, which hopefully happens Friday morning.
Yeah, I was gonna say, don't worry. I know there's QCP receipts of calling this before the move happened in your guys's your research feed. So we believe you. Johan, how about you? Good to see you, man. How are things going? And how was your last 24 to 48 hours? And yeah, how are things going?
All good. Kind of business as usual for us. Everything is automated. Everything is tech driven as such. So I'm Julian Koh, founder of Wintermute. We were well positioned as well, luckily. Maybe just a lull or so, the urge to do something when it was just a bit lower volumes as such. I didn't imagine it would be such a 180, to be honest. So the odds are now, to give more color to Annabelle's comment, is that the odds are now shifting apparently from whatever way you look at, maybe body market is more in the mid 60s or so, or low to mid 60%, but then a few like Eric and so on out there just pricing the likelihood of it being like 75% now. From 25% to 75% chance of being approved. Yeah, it's everything is automated on our side. There's been obviously a bit more activity. I did not wake up overnight as such. Thanks, Simon, for saving me from my 7th or 8th panel with Darius. So you're replacing him very, very well. Love you both, but it's good to get a bit of diversity as well. Yeah, we saw, I think, a few data points for people, like just staying really high level, is that I think it's one of these rare days we actually saw more volumes in ETH than BTC. So it shows the shift. Yeah, I'll say that.
Awesome. So like I view you guys as complementary. I mean, I read QCP's research. I've used Amber's platform, Whalefin. I've participated in some vaults on Julian's platform, and Johan, I think you're probably providing liquidity to most of the platforms all of us use anyway. But it might be interesting for the audience to understand kind of how you guys got to where you are now. So maybe like a quick evolution of your company, when you started, what you started with, what products you're doing now, and maybe what's the most important for you now. And then also, like I said, I view you guys as complementary, but maybe if you could talk about maybe what sets your firm apart from the others. We'll go in reverse order. Johan, you want to?
Yeah, I'll start. Essentially, we started 2017. We were very 100% tech centric. So actually, we had only up to 20 people total actually until 2021, and then now we've turned much more into a platform. But essentially, it was purely CeFi spot until 2019. DeFi heavy from 2019, especially with DeFi at the time. That it was a big differentiator, and it's still a big differentiator for the firm. It's still a very small part of the volumes. It still stays at 5%. If you think of changes in how we do things, it's been mostly from 2022, 23, we built more of a platform, so a lot more OTC, a lot more API, a lot more automated OTC as well. One of the big news out there is more that we can finally share that we're on Robinhood, and we have a more than 50% market share there on Robinhood because they had to announce it themselves. So the more like API, automated OTC essentially. So that's a bigger and bigger part of the business. That OTC side used to be 5% of the business 2021, and it's now about 20-25% or so. Derivatives, the whole reason why I moved to Singapore, 9 months ago, is to help push derivatives, and I would say there's also a geographic angle there. We start to do more on the incubation side. So we've incubated, especially more recently, we've announced GMCI. So essentially an index provider with a top 30 top memes and a few other indices. So it's gone from like being very focused on spot CeFi to actually go cover DeFi and to be more of a generalist. I think we see that the price discovery that we help on the spot side is just feeds into the rest of the activities we have. So with differentiations, I would say around being very tech driven and having been fairly DeFi native.
I'd love to come back to memes a little bit later, and congrats on the Robinhood stuff. I saw that was in like their quarterly report. So
Yeah,
great job on that.
thank you.
Simon, maybe a little bit of background on QCP, and I know you
Mm.
guys as the derivatives folks, but maybe where you guys are at today, and who all you touch and everything in the market.
Yeah, yeah. I'd say we come at this from a quite different direction to Johan here. We started off as very much an OTC house, directly serving our customers and building up a franchise, allowing them to access the crypto markets, working on education and finding solutions. And then out of that, we were early adopters of crypto options. So working with Deribit and other platforms like that, really trying to sort of sell it as a product. And then out of that, we built a market making activity. So a little bit different to the sort of highly automated spot and perp market making. We've got a lot of systems. We've got some very good tech, but it's all human driven at the end. We still need a little bit of grey matter there in the middle to keep things ticking away, and so our trading is our books are never neutral. We've always got a view. It's always driven by the humans, so that we can provide liquidity on block trades and to customers, and also so that we can sort of feel part of it, add some alpha, and sort of give recommendations on the back of stuff that we're actually touching ourselves. We market make into many exchanges. We market make block trades into Paradigm, and we're also connected into various other sort of platforms and things. And outside of options, we're decent investors into crypto infrastructure. And that's quite important to us, because we try and build up the whole environment, let's say, for options, not just provide a few prices and run away. On top of what we do at the moment, we've also added a asset management arm and ALM, lending, all these sorts of aspects.
That's great. Yeah, I think it's awesome. All three firms outside of Julian's here have like VC arms that kind of contribute back into the ecosystem, funding projects and infrastructure. I think it's great. Thanks for the intro. Julian and Annabelle, I think it'd be interesting to hear from you guys on this topic as well, your guys' background and how you got to where you are with the firm. And then you guys touch probably more retail than Johan and Simon as well. So would love to hear kind of maybe some insights on retail activity during the latest move, and what you guys are kind of focused on nowadays.
Yeah, sure. Maybe I'll go first. So Amber, we really started late 2017, early 2018 as a market neutral quant fund before we started building client-facing business, the platform business similar to Wintermere, on the OTC side, trading spot, and later on derivatives and structured products, similar to QCP as well. And then initially focused on CeFi, but also started getting more involved on chain after 2019. So outside of that, we also have our wealth management or asset management business that evolved into WillFin as the platform you're familiar with. But the focus is still on the more institutional, high net worth individual side, given that our products are more about wealth management, growing the wealth, as opposed to maybe the initial wealth accumulation phase. And for us, we're primarily based in Asia, but we do have different desks globally. On the trading side, outside of the OTC business, we have been very active in the market making side since 2018 as well, both on the DMM side and token market making side.
Nice. It's a perfect segue to Julian, who maybe people are using his platform for the wealth accumulation phase.
Yeah, I mean, we started in late 2020, early 2021. Initially, we were building these DeFi structured products under the brand REDeFiNE. And yeah, we were sort of the biggest in that category for a few years. And in the last year and a half, we kind of evolved the platform into not just this DeFi yield product, but also like a full stack perps and options exchange, DEX built on Ethereum. Um, yeah, and I think most of our users are sort of retail, or at least I mean, most of the liquidity providers are obviously some of the guys here on the panel. But yeah, I think the counterparties are mostly retail, maybe a lot of users who may not have access to other options platforms like Deribit, who maybe just have their funds on chain and they want to access leverage. They tend to use our platform. Um, yeah, so I think we are trying to have more of like a retail focused angle, just because we think yeah, we think that like that category is still not yet sort of won in the DeFi space. So yeah, that's sort of what we're targeting right now.
Awesome. And everybody here has mentioned DeFi in some capacity. It's it seems to be growing. Would be interested to hear from you guys, like, is the skill set different on the trading side? Is the technology a bit different? In general, like, how do these strategies or whatever you need to build differ from like the traditional CeFi stuff? Has that been something that's been a challenge, or what types of tools are you using?
Maybe I can start first on the DeFi side. I think, yeah, one of the like post FTX, one of the main reasons why people have gravitated a bit more towards DeFi exchanges, DeFi products is just because anyone can sort of verify that these assets they actually exist and they are like on chain that anyone can see. And I think that's like a huge, at least benefit from, every other month there's like a rumor of a new exchange insolvency. But like for Aevo, for example, you can go to Etherscan and check how much assets are sitting in the contract. So yeah, I think that's a huge benefit. Um, but yeah, I think at least from my perspective, I don't think like there's a ton of I mean, I think the tech and the products are pretty similar right now to CeFi. It's sort of just a distribution game and trying to sort of like eat the sort of market of the CeFi right now compared to like, oh, completely brand new stuff that's happening in DeFi.
Got it. Annabelle, maybe next, you said you were getting active on on-chain stuff. Like, how do you guys view the difference between DeFi and CeFi?
I would say, I mean, DeFi has come a long way since maybe when I first looked at it, 2017 or 2018. So, like Julian said, in terms of products and even on the infrastructure side, it's looking more and more so like what we're used to on centralized venues. But I think there are still key differences in terms of engineering requirements. Obviously, dealing with assets on chain, interacting with smart contracts on chain, while leveraging a lot of the similar strategies we've built that works on the CeFi side is still quite different, to say the least, when you're deploying on chain. And then, although you would have more, I guess, transparency into assets, but in terms of custody and key management, it is sort of the security risk is on the other uh, side versus your counterparty risk versus a centralized exchange. And for us, capacity is also another reason. I think similar to Wintermute, even though we are active on chain, but the proportion of that versus our trading volume on central exchanges these days is still just a small fraction. Although I think all of us here are trying really hard to build infrastructure that makes sure that can continue to scale, and maybe one day we'll get to a spot where it's looking, more equal.
Got it. And
Mm.
Simon, I know you guys are investors in a couple different, on-chain option stuff. So would be curious what you guys see on there, and if you had to tweak some stuff to kind of access those markets, or yeah, where you see this going on the DeFi side.
little fingers everywhere. We were. Yeah, look, we're big fans of DeFi because it's clearly one of the things that sets crypto aside from TradFi. We're all looking for this big differentiator, and whilst TradFi is gobbling up the edges of crypto, and we're seeing more and more convergence. I think DeFi has a lot of very unique characteristics that make it very attractive. We were there in the early days of Ribbon with Julian, providing pricing on a lot of those vaults, and it was a very interesting business and a very nice way of sort of distributing efficient option pricing to lots and lots and lots of retail traders. So I think that's very exciting. The technology has come along massively in the last couple of years. The DEXs for crypto options, that is, the DEXs with their roll-ups, portfolio margining, all of those features means that they're now an attractive proposition, an attractive alternative to the sexes like Deribit, obviously. So I think it's looking pretty good, and I'd expect to see volumes continue to grow there from the like Julian says, from the retail sector. Our view so far is that insties are struggling to adopt the DEXs because you're sort of asking them to swap something that they're quite comfortable with, even if not very good, which is assessing credit quality, with assessing hack risk and and chain risk, and all these sorts of things. So it's much slower there, and of course the depth of liquidity that you get on the DEXs isn't in the option side isn't quite there to what you see on the sexes yet. But I think as we see more retail activity come through the DEXs, and there's a clear advantage, right? In terms of ease of access, ease of trading and things, efficiency of trading. I think we're seeing more and more liquidity move over there, and there'll be a point at which it flips, and I do see a day where that's the primary market for volatility.
So correct me if I'm wrong, but you guys, you seem to love the risk management aspect because these DEXs are fully funded. You can see the assets on chain, like Julian was mentioning, but there's some like security risk, whether it be through the smart contracts or managing your own keys and things like that.
It's the sort of thing that's sort of quite easy to. It's a risk that's quite easy to take if you're trading your own book, if you're trading at home. But when you're signing up an institution for it, there's all sorts of other requirements, which I'm sure Johan can talk about now.
Yeah. So if I can get the same way, I agree with a lot of things that have been said. I've got a lot more sober view on the growth of DeFi user bases and especially on the option side. I think especially on the option side, just telling people to be fairly educated. We don't really see the other side because we face, on the institutions, OTC and so on, so we only really talk to institutions. I would say on the credit risk side is very much swapping credit risk versus contract risk, and then you always need a sufficient knowledge base in-house or outside, and it makes it a bit harder for institutions to, essentially, as Simon said, like people who manage other people's money. So as soon as you've got fiduciary duty, then you need to be quite careful about what you do, of course. I've been surprised even 2.5 years ago, I would meet Swiss banks that would actually be happy to lend on chain. So they wouldn't do it with their customers' money, they would do it with the balance sheet, the bank's balance sheet. And actually they like some of the aspects of being able to recall the loan very, very quickly. So, but I think they're more the exception than the rule. 2+ years ago now, so I think 25th of April 2022 or so, I gave a talk in Davos about DeFi. It was quite funny because it was next to WEF and so on, where people were, essentially just saying that 95% of the volume that in DeFi somehow was dirty money, which we know is not. But it was interesting to do because it was all around trying to. Well, my pitch was essentially like many people on this panel we fully embrace DeFi because we think it's very, very aligned with the ethos of the crypto space as such. So it's very much about disintermediation and just giving much more power to the people as such. And beyond that, there's been the main two fears that people have with DeFi is essentially transferring funds on chain. Where do they send the money? Does it land where it should be landing? And essentially not losing their own keys when it's not when the funds are not moving around. And there's all the things around sort of UX UI that have really, really improved massively to help with systems of essentially abstraction, context abstraction, and a few things that really helped around UI UX that help with this. Sadly, if you look at the numbers, it's still around 1.4, 1.5% of all the crypto users are DeFi users, and that hasn't really changed for 2+ years. When FTX came down, first thing I said to friends was like, oh, it shows like failure of centralization and DeFi will rule. And then essentially it's just like I was kindly told back that essentially CeFi is still very much the educator, and CeFi is still very much the front door for most people to get into crypto. CeFi is very much educating as such. And I think to a point that actually the DeFi platforms that have done well have had a hybrid CeFi DeFi approach in many, many cases. So either by being very hybrid from the start, or essentially nowadays you run an L2 on top of an L1 as such to be able to get similar performances as such. I think what's still constraining a bit the option side on DeFi is very much margining. It's very difficult with a decentralized infrastructure to have proper portfolio margining and the latency, but it's good for just good for people to get access to it and learn.
And is the number one proxy you look at for DeFi adoption just would it be number of users? Like, how do you think about how big it can be? Like, would the AUM of staked ETH be like a good proxy for how big DeFi can get? Because obviously those people have gone through the process of interacting on chain somehow. Like, is that what the addressable market is? Or would you want to see the number of users growing? I'm assuming people just look at the addresses and count them and compare them to the number of users CeFi platforms say. Is that how you derive that 1.4?
Yeah, for me, it's mostly number of users, but I think I mentioned some of the positives, which is essentially like in terms of UI UX, it's really, really improved over the last 2-3 years, I would say. That's also a factor.
Got it. Switching gears a little bit on the CeFi side, everyone's mentioned risk management at some point, assessing credit, all that stuff. I think it would be interesting to discuss like post FTX how everyone manages credit, how the risk management frameworks has changed. Are you guys dabbling in some of these off-chain settlements, or not a user of those and continue to just manage stuff internally? Do you keep minimum amounts on exchanges? Do you work out credit lines with them? Like, how has everything changed for you guys since FTX?
I can take a lot of that one in the way that let's say pre-post FTX, the biggest change was the relationship with exchanges, especially as market makers. So pre-FTX, it was essentially an exchange with us market makers for the credit quality and then balance sheet numbers and P&Ls and so on. And then post FTX is basically the other way around. It's basically us asking the exchanges, how credit worthy are you? When they didn't really want to share information, then it was already like a yellow to a red flag. That actually went a lot more further, that we actually doing the rounds and asking actually exchanges to adopt more rule books and such, just to make sure that, like, if there's we know we don't do it, but if we think that people market manipulating and so on, we want that to not to happen in crypto markets as such. And we know it's harder things to control because there's so many venues. So essentially we're pushing for a bit more like institutionalization of these exchanges as well, in a good way. It has, on the on the fund management side also on when we don't fund, shouldn't use that term, on the way we manage credit risk as such. We did see it's probably pushed more OTC trading as such. So on the option side, Simon is quite experienced with this as well. That we've got a good amount of visitors actually being put in place, and it just means there's just a lot more bilateral relationships happening. So direct settlements is just bilateral settlements as opposed to using exchanges per se. That's the bulk of it.
Maybe sorry to put you on the spot here, but like thoughts on like custodians getting involved in this with like off-chain settlement stuff. Like, you think that is a long-term solution that can work, or you think it's gonna be difficult with just the way things move on chain and how fast settlements can happen? Like, what's your view on these off-exchange settlement type?
No, it's good, and I think people will always love to cross and settle for just it's essentially the old-fashioned way, like, because you can agree on a block and you just settle it a bit later, or at least you cross and you share the price discovery with the rest of the market essentially later. That works. I think these things depend less on technicalities and then the infrastructure. It depends more on network effects. So if you've got enough people using a certain platform and they just want to, you get a counterparty wants to cross through or settle a trade through a certain platform, then you end up using them. We don't see a lot of genuinely prime brokers as such yet. We've seen like Hidden Roads and so on that are just emerging as such, but there's not there's a mixed bag, and I think it's more shifted things away from platforms at this stage.
Got it. Simon, maybe over to you.
Yeah. So I guess the big thing that's changed is that whereas previously we would connect into a lot of different exchanges, and it was okay, put a little bit here, a little bit there, and then get our pricing out. Now we are a lot more selective about where we extend our liquidity and where our assets go. So we're and in options is pretty clear, right? There's a small number of exchanges where most of the liquidity and most of the action is happening. So we concentrate in our activity around those. We have to be a lot more. I mean, we're already very careful of our wing risk and sort of management of capital movements, but that's even more in focus now. So we're always very careful to move assets around and make sure that we've got all of our portfolio margins suitably covered. And probably the best sort of development for the market is exactly these off-exchange solutions. So and it's pretty straightforward for derivatives, right? So now the majority of our assets don't sit on exchanges; that they sit in third-party custodians, which is a great solution because it eliminates the credit risk, and but it still allows us to sort of trade efficiently and effectively. We're not yet quite at the like Johan says. Everyone's been waiting for this prime broker solution. I mean, in fact, I remember Dan us talking about it about 5 years ago. Yeah, it was still sort of struggling to find institutions that are big enough to trust with enough capital that are actually able to put those assets to work inside the crypto ecosystem. I think it's quite a difficult one to solve, but there's some propositions at the moment.
Great to hear that you're dabbling in the off-exchange stuff. I think that's kind of emerging, and there's a couple of them that are backed by banks, in fact. So I think that is kind of a pretty interesting topic at the moment. Annabelle, on your side, like pre and post FTX, how are you guys have changed things, or how do you view exchange credit risk? And we'll let you run with that one there.
Yeah, sure. So even before FTX, we internally had different risk parameters in terms of our exposure per single venue. But afterwards, I think even that has to be reviewed given what happened with FTX. And actually, on our books, so we moved all the client assets to segregated SPV fund structures, and all of that is custody with third-party custodians that have a tri-party settlement agreement with exchanges or have the mirror function where they'll essentially give a line of credit based on the AUM you have at under custody. There is funding costs involved, but again, that's another way to segregate or to mitigate your counterparty risk on some of these centralized trading venues. There are more and more of these custodians are offering similar solutions, but right now, I think like Yuan said, it's still a network effect, right? Right now, we might have to work with a handful of the custodians to cover the different exchanges that we do trade on. But I can see, maybe a lot of that is also going to be combined in some way or more merged in some way so that there is finally a solution that is more like a prime broker or things that we talked about just now.
Yep. I think, yeah, I don't know. The crypto custodians are, from Silicon Valley. We have the few ones from the banks coming. So I think prime broker is not super far away. But yeah, Simon, I mean, I remember talking about this 4 or 5 years ago. So who knows how much longer it's going to take. Julian, I have a kind of a different way to ask you this question. Like, do you think you guys are a platform that was kind of grown out of the response and demand for a platform that's not like FTX, where you can have this risk? Or do you view yourselves as, complementary to CeFi related platforms and just different ways people can interact with the market?
Yeah, I mean, we do think it's just like different ways people want to interact with the market. Yeah, I do think like just the nature of these CeFi platforms, they also appeal to like each platform appeals to sort of different jurisdiction or a different geography. And I do think that there are a bunch of users who are just sort of excluded from a bunch of the major platforms. So we think, yeah, that's just like we want to serve those users at least. But yeah, I think like longer term, we think one of the interesting um, sort of benefits of being on chain is that you can actually have other devs build on your platform. And that's something we are looking into a bit more. So I don't know if you want to build like a basis trading strategy on top of Binance. I think that's kind of difficult because the platform is like closed. But there could be a future where we could like let other people build like straight into the exchange. Yeah, so I think that's sort of one of the benefits of being built like on chain. We're still exploring that, but that's kind of the direction that we're thinking of going.
Yeah, pretty interesting. I've never heard it presented like that before. I could even, yeah, see a world using maybe multi-sig wallets where people don't have to fully surrender all of their money and can tag along some of these different trading strategies that people come up with. I think that's pretty interesting. I had another question on like the DEX side. Like, do you guys spend any time at all thinking about fiat on-ramping, or is that just something you don't even think about at all, and you leave that to everyone else to kind of figure out how to, obtain the assets and the wallet that they have to bring to your platform? Or do you guys spend a lot of time strategizing internally, like, how can we make this easier? Like, do you have ambitions to launch like a wallet? Do you have ambitions to integrate with like fiat on-ramps? Like, how do DEXs that want to grow think about this?
I think for now we're not thinking about it. I think, and that's been like the same for most of the major CeFi platforms. When most of the new exchanges start out, they're just crypto to crypto, and only once they reach some scale, and then they sort of do the fiat piece, just because it's like maybe 100 times more difficult to get all the legal stuff to solve the fiat component. So yeah, I think we are going to follow a similar path. Um, Sort of the base assumption is that you already have crypto. But maybe, I don't know, if we have 100 million users, then yeah, maybe it does make sense to sort of solve for the fiat piece as well. But yeah, I think before we reach that scale, it's sort of too expensive, and it doesn't make too much sense for us to work on that part of the supply chain. But yeah, I mean, there are all these new crypto startups trying to be like a plug and play, where you just like inject a few lines of code in your API and they can sort of just fiat on ramp through some other
Right.
service. So maybe we could integrate that. But yeah, I don't think we're going to tackle like the problem as like a first party solution.
Got it. Understood. Everybody on the panels mentioned like institutions. I think every panel it's a requirement you ask about institutional adoption. But maybe like one topic that could be interesting, I think, for viewers is like, has the ETFs, how do you guys personally and maybe from a firm think about like the ETFs? Like, is this 'cause obviously institutional adoption can happen much easier like on the ETF side because everything's kind of solved, like the brokerage, the custody, everything. Do you think this is a threat to your business? Do you think it's complementary? Or what do you think? Do you think the ETF can be like a gateway drug to them to then, explore other things? Like, how do you think about the ETF and how that impacts institutional adoption for the businesses that you guys run? I mean, one area, Simon, you'll laugh, but I'm waiting for them to launch options on the ETFs. Like, I don't know when that's going to happen.
Yeah.
I know it's still in review, but I think like that has some interesting downstream effects on like, Deribit market and even Julian's platform. Like, there's going to be prices all over the place for this. So maybe with institutional adoption, like maybe in general, what do you guys see? And then what are your thoughts on like the ETFs and how this impacts your business?
Well, maybe I'll start then. So yeah, you're exactly right. We're spending a lot of time thinking about the impact of ETFs on our business, and ETF options are probably the biggest sticking point for us, because it is a market that's quite difficult for us to sort of compete with the traditional equity options guys out there, and yet it could be a much more efficient way to access crypto options for US institutions. I'd say one thing. I mean, we've had options on the CME for many years now, and that's equally accessible for US institutions, and yet it hasn't. The volumes on the option side, at least, haven't made any sort of noticeable dent in the overall crypto options. So I've got a likely base case is that whilst we see a sort of growing market in ETF options, and I'm actually optimistic that we'll see that sooner than later. This would be kind of additive to the main primary market, which I think will remain in the crypto sphere, just because it's still, for those that are connected, it's still a more efficient place to trade in terms of spreads, access, liquidity, all these sorts of things. And once liquidity is in a particular location, it's very, very difficult to shift it to anywhere else, right?
Yep.
So I think I tend to think of this as probably an additional market rather than a replacement for the one that we have. It's and there's very much possibility of bifurcation or splitting of markets according to who can access what over the next year or so.
Annabelle, maybe you guys, are you dealing with the Hong Kong ones and the US ones? Like, where do you guys fit into all this? And what are your thoughts on ETFs and institutional adoption and how it impacts your business?
Yeah, for sure. ETF, especially, I think in the US market, I think it's more of a signal than maybe it definitely brought liquidity boost primarily to the Bitcoin side. But I think for the rest of the market, especially the alts, we haven't actually seen that much liquidity injection as maybe what people would have hoped. But it is a great first step, and then a great signal to the market. And then in terms of The Hong Kong ETFs, yes, we are onboarded for a few of the ETFs as the day one market maker, but the volume there is obviously not comparable to the volume we see in the US side. So I think it's still going to be all eyes on US ETF markets and also in terms of regulation. And with the election coming up, I think we're already seeing some of these decisions being reversed, and we have to see, what really happens for the rest of the year and also beginning of next to see how the regulatory landscape might shape. But all in all, I think we are very bullish on in terms of the further institutional adoption that can come from ETFs. But I think, like Simon said, we're still seeing somewhat isolated market, right? All the more crypto native side, we are maybe talking about meme coins and other things, while the institutional side, we're looking at ETF right now. There's not that many instruments to trade yet, and most of that is custody somewhere and not being really kind of the liquidity there is not being unlocked to the crypto native side for now. So I think we really need to, on a crypto native side, we really need to see where the new influx of liquidity will come from.
Understood. It definitely wouldn't be a crypto trading panel if we didn't talk about meme coins for a little bit, maybe. Johan, you mentioned earlier, like you guys have an index. I mean, tell us about that. Like who's like the user of that index? Where does that fit
So,
in this whole picture?
so if I can just add two quick elements of answer to the previous question on the ETFs. It makes our life, the five of us on this panel, very much more interesting when Larry Fink is doing the marketing for us. So it's, I think that's the big switch where actually we thought that as a firm, we really thought that, do we need to do like a revamping on the brand to be more institutionally friendly and be less crypto native, be less cypherpunk and so on. And it turns out that actually it's more TradFi that actually converged towards the crypto culture as opposed to the other way. So that's a really interesting element. And to Simon's point, is like we lucky that we have enough balance sheet as a firm to basically be participating in both the US and the Hong Kong ETFs as such. We're happy to do about 60% of the issuance for the day one ETH ETF in Hong Kong. But it's, the clip sizes are $100 million plus. So actually, there's more competition from TradFi competitors really than from crypto native competitors there. While keeping into account that actually the US dollar in crypto space is actually quite expensive to borrow. So it can be a distraction as well. So it's good. I think the Larry Fink doing the advertising or the marketing for us is very, very good. But it is, I would agree with seeing as a new market, and it's not always an easy one to tackle. In terms of, so the other side of the digitalization, the other side of getting new users is that getting more essentially retail interest into the game. And I think the meme coins, as opposed to or as a parallel to I should say to meme stocks as such, as an interesting way for me to just look at retail interest in the space. I kind of like meme coins just because they're very honest. They're not pretending to build something. It's just they tend to have fairer launches than actually most coins. So whatever, I'm not the lawyer in the room as such, but it's an interesting philosophy to see, meme coins getting traction. And so we have a meme coin index that you can check the methodology on the GMCI, essentially on the GMCI website as such. I get regular questions about how do I get my meme coins in the index, so I just prefer to just there's a methodology, like very, very old-fashioned way of learning how to get in there. And it's I think it's quite interesting to see that some have been there for, Dodge has been there for ages. Pepe has been there for probably 3-4 years now. So it's interesting to see that these become like a good barometer for me to just see what's the retail adoption. And actually, when you think of the foods, I mentioned Robinhood, but a lot of neobanks, robo-advisors, if you look at the makeup of their volumes, they obviously, so we tend to face the neobanks, we face the institutions, but the neobanks and the robo-advisors, they have a big retail user bases, and then sometimes 60-70% of their volumes are just meme coins. of the crypto volumes are just meme coins. So it's an interesting, parameter that I found there.
So yeah, the volumes there are kind of hard to ignore. I mean, just quickly, Annabelle and Julian, are these on your guys' radar? Like, Julian, are you going to list Yoan's index on your guys' platform as a tradable instrument? Annabelle, how are you guys thinking about listing meme coins?
We actually saw some meme coin volume on the OTC desks, but and then some of the obviously the bigger ones on Wilfin, our platform as well, where our users can access that directly. But for some of the smaller names, the long tail names, I think primarily still accessed through our OTC desk, given the liquidity there is not very good. But yeah, I think even some of these high net worth individuals are pretty keen to get some skin in the game, and for them, it's more fun than maybe trading some of the other majors. So
Nice. Julian, from your side?
Yeah, no, we have listed quite a few of these meme coin perps. We actually just listed one yesterday, which is Mog. Is some coin on ETH. But yeah, no, I think retail likes trading this stuff. We are actually sort of doing some research now on like if we can offer options on these meme coins. Just because I think retail traders are chasing that like crazy 100x, 1000x returns. And yeah, maybe like trading ETH and BTC options is just too boring for them. So it is kind of like buying one of these meme coins feels like buying an option in itself. But like if you can even buy like get more leverage by buying a call on that, I think that's pretty crazy. So yeah, we're just doing some research and trying to see if this is what some people want to trade. So yeah, we are sort of investigating that closely. But yeah, we have looked at Wintermute's indices. So yeah, I'll take a closer look after this and see if we want to list that as well.
There you go.
Thanks, Dan, for doing my work.
Yeah, you know how to reach Johanna. I mean, you just said something really crazy that like people find ETH and BTC options boring. I mean, that's
Yeah, come on, man.
say that to somebody that watched the market 48 hours ago. Okay, look, we only have a couple minutes left. I think not financial advice, but do you think the ETF is going to get approved in the next couple of days? And then, whether or not you're open to it or not, like, is there any upcoming launches any of your guys' firms have, any partnerships, anything you're excited about in the next couple of months that people can, subscribe to your feed and watch for that to launch? Maybe Annabelle, you can start.
sure. I mean, in terms of the ETF probability, I mean, as a firm, we're market neutral, but we're all in the beta together. So obviously, we hope that's going to get passed. But I feel like it's more of a political question than a market probability at this point. So, and in terms of new launches, so actually we will be announcing something, I think, within 2 months, also on the incubation accelerator side. So please tune in for the news. You can find us on Twitter, on our Substack, and our official website as well, ambergroup.io.
Awesome. Julian?
Yeah, I mean, I do think the ETF, I mean, just based on like the market and based on what I've been reading on Twitter, it does seem like there is like a high likelihood that the ETF gets passed, but we will see in the next like 2 days. Yeah, I think from us, we are actually launching our what we call like Aevo strategies pretty soon. So this is just like our current exchange is just focused on trading. But we are launching a whole new section of products which is focused on sort of yield generation. So anything from like vol selling strategies to like basis trading, we are launching a bunch of that stuff. So yeah, we'll be launching that in the next few weeks. Can follow our Twitter at AevoXYZ. And yeah, that's sort of the best way to get updated.
Awesome. Simon, how about you guys?
Yep, personal view, we're going to see an approval in the next couple of days, just based on just based on all of the cogs that are being moved and put into place right now. In terms of products, well, we're launching new structured products all the time. Just subscribe to QCP broadcast, and we've got lots and lots of trading ideas there.
Yep, can highly recommend the research. I read it all the time. Yo, take us home, please. You're the last one here.
So a bit like Annabelle, we're very market neutral, but good news helps prices to go up, and then we're very close to the recent highs, and then maybe recent, close to recent highs, new highs are quite likely, and it just does the marketing for us. And it's the best way, actually. We're talking about institutionalization of the market. New highs are just the best way to be on CNN and Bloomberg, and often enough, and actually just get new people into the space. So looking forward to that. I think it's priced at 75%, and then I'm hoping it will be approved as well. If it's approved a bit later, that's also fine. I think, Danny, you're the only American really in the room, but it looked like the Dems are just basically just realizing that they would lose too many votes if they antagonize the crypto ecosystem. So they probably would just want to claim that they when they are in the office, there's approval, and then so on and so forth. So I think the narrative changed. So that's good. I've mentioned a lot of the highlights over the panel. So Robinhood, we're very happy after a month of working with them that we can finally discuss it now that they made it public. So that's a good sign, and it's Web 2 to Web 3 adoption essentially. The incubation GMCI is a big thing, but we also have Wildcat. So we have essentially a DeFi platform where you can actually just double-sided onboarding, and it's growing to about $30 million being lent or borrowed through the platform. So some DeFi lending that's growing the right way. And yes, just we'll have a few more investments to share in the next few weeks, but just about we've made about 100 investments to date, so we'll share that a bit later.
Awesome.
Thank you.
All right. Well, thanks everyone. That was great. I learned a lot. So looking forward to chatting with you guys soon again.
Thank you.
Yeah.
Thank you.